Jessica has been a friend of mine for several years, and because I've known her through different organizations, the Small Business Resource Network, and the Jacksonville Business Professionals, and she's invited me to see the venture capital group presentation she was making there, and I thought, okay, that would be interesting to have that kind of wisdom here, and then she's talking about the buy-in and buyouts for firms, and I thought that would be interesting, and then there's also the concept that a lot of times lawyers have a question about their banking and they can't get to their banker, or they just want to have a free time just to ask a banker with no obligation, and they can say, okay, is it really going to create a problem if I do this? And so she's got all the answers, and and Lou has a few too. So let me just shut up and let you take it away, Jessica.
No, and I greatly appreciate the opportunity to speak here and to kind of talk about a couple different things in banking. I added a couple different things other than just the buy and buyout based on feedback that we've had with other legal firms that we've spoken to of things of interest for them. So, and I think I'm just going to sit down and talk, if that's okay. And I'm going to have Lou talk a little bit about First Citizens, first of all, so you know who we are.
Yep. I'll do the quick commercial, if you will. So I'm not surprised if no one here is like, I don't even know who you are. I kind of heard you, but we don't know who you are. So First Citizens Bank, headquartered out of Raleigh, North Carolina. We are publicly traded on the NASDAQ. Our stock price is about $1,500 right now, $1,400. We've had 3 CEOs in 125 years. It is the largest family-controlled bank in the country. Frank Holding is the 3rd CEO. His dad. Hope Bryant is the vice chairwoman, his sister, who I report to from a whole chart. And we're now in 30 states. In the last 36 months, we went from $55 billion to $110 billion when we bought CIT Bank. And our claim to fame this year has been 5-6 months ago that when Silicon Valley Bank failed and other banks failed, we acquired Silicon Valley Bank. So today we sit top 15 bank in the country, coast to coast, almost 20,000 employees, family controlled, pretty impressive, and not much we can't do. So we've been here in Jacksonville almost 24 years now, funny enough. It's very boutique. We generally speak only dealing with business owners and business clients, commercial clients. Although now we are starting to kind of do everything with our size. You kind of need to do everything, consumer banking, which we're really good at, but we just, generally speaking, we do commercial and business banking only. So we have 4 offices in town: San Marco, Bartram Park, Ponte Vedra, and San Pablo. Or that's it, San Pablo? No,
Yeah.
San Marco. Yeah. That's it. I have so the 4 offices, and I have, if you will, only one Jessica, but 7 business bankers.
Good response.
On the streets, kind of working with a portfolio of business clients.
Yeah,
That was
perfect.
psychic income right
It
there.
does. I'm like,
I
feel
knew
the energy.
When she started complaining later after lunch, I can't believe you said that.
No, we actually have a really good team, and the nice thing about First Citizens is everyone is very seasoned here. So we've got, I think, a good group here as well. So, and then I hadn't heard of First Citizens either when I came over. Just little bits and pieces. I was at Regions prior to First Citizens for 16 years in commercial banking, and I don't know what took me so long to finally come over, but I owe this guy that. So thank you for stalking me as long as you did to come over.
Literally 10 years.
Yeah, true. So again, I just threw up a couple articles that have been in the papers lately about First Citizens, but there's 3 that you'll see that are actually Jacksonville centric, and I think that's important just to know that First Citizens is very focused in the Jacksonville market, and will be something that we continue to focus on. The woman at the top is Hope Bryant. She has been here in market twice since I've come over 2 years ago. I can't say that I've seen the region CEO more than once in my 16 years there. So that's a very big deal to me. And she sits down and meets with our clients, which I also think is very important. just threw a couple slides in here on the bank and what we do. We're a bank. We take deposits, we do treasury services, and we do loans. So, it's very, very similar with many other banks. One thing that we're dealing with a lot right now is our guidance lines and equipment financing. We can do lines up to a year where clients can draw on it, and then we can term it out for the appropriate equipment they're buying. We're seeing a huge influx right now because Section 179 is changing next year, and so it's going to be less of a benefit to clients to buy it in next year as it would be for this year. So we're very quick in moving with that, and we can always go to Georgia to close to avoid doc stamps for our clients, which we do it way too often. I try to limit it, right? I don't want to do it on $100,000, but we'll do that. And then the purchasing card, we offer that as well. I wanted to share this slide because I think that this shows well on what we do, and it's not just professional financing. We actually work with many different clients, many different transaction sizes, many different focuses. So just wanted to kind of share that part. Most of these are mine. I put a couple other ones on that were a little bit different, but kind of gives you an idea of the different
And all fresh,
areas.
like in 3-6 months.
Yeah. Those are all very recent transactions. So, okay. So now let's talk about industries, and then kind of our focus is on partnership buy-in and buyout things that we can do that way. The first one is professional services, which would encompass attorneys. So professional service financing includes architects, engineers, attorneys and law firms, CPAs, and insurance agents. And what we're able to do, which is a little bit different than what I've been able to do in my past career, is finance partner buy-in and buyout without going through the SBA. We will do it based on the history of the business and of the buyer. And we can finance up to 100% of the purchase price, up to 5, sometimes 7 years, depending on the particular industry. And generally what we do for collateral is an assignment of life insurance. That's pretty much the skinny of it. So it's not a long process, it's a very quick process from start to finish to get it done. I've got 5 right now that I'm working on between medical and professional, so it's keeping us very busy.
I would say the biggest difference, and I was at Wells 10 years, and we would like SBA. When a family owns it, and they deal with attorneys and insurance agents, they understand the value of professional services. It's a buy-in at the top of the level that when we get these, we're trying to say yes. So we're not trying to figure out collateral. We're just going to do it because professional services is key to our economy. Obviously, we want the most experienced ones and the top level ones. But that's when I came over too. I was like, well, I can't believe we do all these buyouts just like this. Because in reality, if it goes bad, there is no collateral. All right. So that's kind of a buzzword for banks, collateral. So, but it works out really well. It's very quick.
Yeah, it's very quick. And I know it has I think 750,000 as the number, but we have gone higher. We've gone higher quite a few times, so that's just kind of a general box number that we look for.
And that's where if it goes higher, then maybe we do try to find some collateral, or maybe it's a second home, or a second or a primary home. If we can figure it out. We'll get flexible on those larger deals.
Right. Similarly, with that one, medical's a little bit different. So medical, we can go 10 years. So instead of 7, we can go 10. With the caveat, with dentists, we can go 15 years on a repayment. Their sizes are a little bit larger generally, but essentially it's the same thing. Same concept as it would be for the professional side.
Yeah, and I will say on all these buyouts, generally speaking, not all the time, I would say generally speaking, there is a seller note. Because maybe the price is valued at X, but the cash flow available can only support a certain amount of debt.
Mm-hmm.
So there's usually a seller who is holding a note, which can honestly be very beneficial, right? They might want to hang out for another year, help the transition, get paid, tax benefits. I'm not taking all that lump sum all in, and so usually. It's usually start a note, but if there's not, there's not. Okay, right into the sunset.
So none of mine have those right now, but they are all very, very strong at this point. So, but it definitely helps. And I think it's nice to have the seller to have a little skin in the game too, to be
Do you
honest.
subordinate those?
We do. Yeah, we have to. We have to.
Sometimes with interest-only payments, yeah, that just depends sometimes. Sometimes we get stuck in negotiating, and so if it's a decent deal, we might not care to do interest-only payments, right? So don't pay us off, right? Depending on the size, maybe there's a covenant where they have to come ask us before you make the payment. At this lower level, lower note level, there's usually we try to limit the covenants.
They don't do what?
The covenants.
Covenants.
So on our larger transactions, sometimes we'll have a debt service covenant or liquidity covenant. When it comes to transactions like this, we try to make it very covenant light or really just annual financials generally as a checking point. So we do love getting appraisals if they've ordered one outside, but it's not necessarily a requirement. On this size, we don't have to have that. We do have some internal numbers that we calculate to make sure that you're not overpaying for the business, but beyond that, it's completely between buyer, seller, and then underwriting.
You don't care if they overpay, you just don't want them to overfinance.
Whatever
Sure.
cash flow.
Yeah, we may have an opinion on it, but at the end of the day, they're putting the cash down for the difference, that's between them. But on our loan side, we're gonna make sure that cash flows and that the client's in a good spot.
And to your point, like the last 12 months, maybe the last couple of years, sellers think very highly of what it's worth, and to a certain degree, they missed the boat if they didn't sell and quote unquote got greedy the last 12 months. Now rates are 7% when that guy could bought it in at 4%, so it's limiting the value or the amount of money they can get out.
Good point.
So we've seen a couple of just drag on because they're just going back and forth, and they're like, look, this is as much as we can do. And by the way, every time the Fed interest rates, your loan goes lower, right? So it's a difficult time. I think a lot of people want to transition, but it's an emotional time, right, to sell your baby, if you will, and not get as much as you thought you wanted to.
I just heard a professional on Monday tell me that he does not want to die in the saddle. And I thought that was an interesting term. And he's had his business for 45 years, and so he's ready now to sell.
Yeah. And all of these professional services, medical, dental, the CPAs, the attorneys, like, one thing that kind of upset's not the right word, but like I feel for it. Like sometimes, like there should be a succession plan, because the succession plan ends up, hey, I've done well, I'm 55, still working 5 days a week, I'm gonna go to 3 days a week. Well, what does that do to your revenues and your collections, right? You start going down, and hence your value of that practice. So yeah, mentally your name is worth something in the field, but you let your collections go down now. Get an associate in there. Go to 3 days a week, because let the associate pick it up, right? And hopefully he's going to want it, right? So we see that a lot. They don't plan. It should be with y'all planning of those buy-sell agreements and
Right.
estate planning, succession planning.
And it is always much easier to finance if it's somebody who's already in the firm than it would be from somebody from the outside. So you'll get better terms, generally speaking, if it's somebody who's already part of it. You can also wrap in, when you're making an acquisition like this, some working capital as well as equipment if they want to make it one kind of nice, tidy package from that standpoint. So.
And we see real estate related, right? Some owners own the real estate, so they might sell the real estate with the prices, or they might not. Either way.
Yeah, get some landlords through it for sure. And then this one is just an interesting caveat to that. The bank has identified these particular industries as ones that we feel strongly about, that they do very well, that we're comfortable lending to. And so for these plumbing, HVAC, electricians, and landscape architects will also open the doors to partner buy and buy out without going via SBA. So,
It's 5 years, right?
with a 5-year.
5-year term, yeah. So again, this is actually new for the bank. And again, straight from the top, the family saying, these people in our communities, first of all, the workers make 6-figure money now, most of them, right? And so, like, they're not going away. We need more housing, so it's a top-down, like, we need to take care of these business owners better than others. So, huge potential here. As a leader, I would tell you that I'm asking my bankers to call on more of these people,
It's a great business to
because
be.
no one else is, to be honest with you.
Everybody ignores them.
Right.
Yeah, and they're amazing clients. So, okay, last kind kind of interesting portion that I think, this is from our last tournament that we spoke about, is hemp banking. First Citizens has been in this industry for quite some time. They're comfortable with it. We lend in it, we take deposits for it, we process credit cards for it. So a lot of the clients that we receive are oftentimes doctors that had started doing a CBD side to their business, and they got a letter from their bank saying, hey, we're shutting down, and they have to find a new bank right away. So this was something that I thought was very forward thinking from First Citizens' point, understanding the industry, understanding the regulations, and understanding how to be able to bank it from a legal standpoint correctly and not getting in trouble.
Yeah,
Do you think y'all will go into full marijuana as soon as you're allowed to in the banking regulations ease?
That's a good question.
So I put you on the spot on that one.
I think the family has a lot of interest in it. Again, they're thinking as business owners, generational wealth.
Yeah.
Their kids work in this business, all right? Like the fourth generation is working as bankers, regular bankers in the company, which is really cool. So I think they're looking as business owners. This makes sense to bank this. So I think when regulatory environment gets a little clearer, they will. But we have jumped in with the regulatory approval to do the CBD and hemp products, anything hemp related at this point. And I think most of us know that like, hemp is an amazing natural resource. You can make furniture out of it and all sorts of stuff, clothing, right? So I think generally speaking, we're looking for manufacturers of those and the processors and distributors of those, right? If medical marijuana or marijuana becomes legal, then that would be a different focus for sure.
Yeah, so these are kind of the businesses that we serve now. So we will work with the growers and the farmers, the processors, the manufacturers. We even work with labs that test to a certain point. So anything that basically does not directly touch the leaf. Am I saying that correctly?
Yeah, and like certain THC levels. So
Yeah.
I think the regulators kind of give us like, all right, we're going to let you do this, but that compliance department is really, it's been really interesting. It's, there's an application process. They'll call back a client like, hey, you told us on the application you don't sell this gummy, but on the website you still have it, and that's like prohibited. You need to take it off or move, right? So it'll be interesting how we continue to match that.
All the legal funds.
Yeah.
We have a really good department that actually does nothing but this. So then, I don't want to be a specialist. I would just like to have somebody who specializes in that to have to deal with all the regulations.
Yeah, that's its own division in the bank right now.
What about farms related businesses? Because that's been a problem for some of my clients is that banks have, some national banks have refused to work with firearms companies.
Oh, firearms.
Oh, firearms. Oh,
No.
I thought you said farm shows.
I did too.
Firearms.
Yeah, sorry. Yeah, so I think it's on our it's on a caution.
If that.
Yeah, if that. So yeah, it's as needed, not as needed. It's just every example you need. We do not have a prohibition. Like yes.
I think
some
what
of our
you're
snacks have
referencing is
prohibition.
not the case here. So when we say caution, it means that we do it. We might have a larger bucket full with it, so we do it on a certain basis with it. But yeah, no, we definitely have those types of clients. So
Like a shooters would be like someone that
Yeah.
we could bank. A manufacturer, domestic manufacturer, we see that.
Well, we've seen it everything from retail sales to gun ranges to parts, components. I mean, everybody has.
been hit. I know.
Yeah.
No, I've actually financed a range, so
Okay.
and it was a lot of fun.
One locally?
Mm-hmm.
I think I know which one that
Do
is.
you? Yeah. It was interesting. I did not understand how you have all the berms and everything in place, but it was a fun one to do. So, let me see what else. Oh, okay. And this is just one little thing I added in, and then I did get you guys something as well for today. But this is something that First Citizens puts money into, which is our vertical news and our quarterly insights that keeps us up to date with different industries. So. For me, I have attorneys saved under my favorite, so I get a monthly newsletter that'll tell me what's going on, what's something new that just passed, so I can understand what's going on with the industry. I also brought you all, and we do this for our clients, very own vertical IQ report for law firms, so it goes off of your NICS code, and this will actually share what's going on in the industry, benchmarking, so where your numbers should be as compared to most law firms in the United States. And there's little caveats with specialty focuses and things that way, but printed one out for all of you just so you could kind of take it and look to see where you are and kind of get an idea of what First Citizens does for our clients, so you can understand that we don't just open accounts and do a loan and never call you again, but we're actually invested in you now and in the future. So, what questions on anything do you guys
Could you
have?
take an example, just like what you're talking about? Like, I assume you're talking about like a one-person law firm, and then a younger person is going to take over their practice or buy their practice. Is that what you're talking about?
Yeah.
Okay, just how does that work? I mean, what are
So
some numbers, ages, how it works? You know?
yeah, so, well, essentially what will happen is we will get a request from the purchaser, I want to buy into this practice. Generally, you'll have an agreement on what that dollar amount looks like, so we can start our process. We will pull financials for the buyer. Let's give us 2 years tax returns, a personal financial statement, and then we will get information on the firm that they're buying into, what percentage they're buying, that kind of thing. Then we'll kind of run the numbers on what the purchase price is and determine if it's able to be financed at 100%. So going back to Lou's point, if it's not quite where it can cash flow, then you might do a seller second behind us to be able to make the whole number work. Once we get the approval in place and we kind of verify, okay, this is within range of what a purchase should be, then we will get life insurance, request that the client get life insurance put in place. We'll get your final documents, so whatever your contract reads, update SunBiz accordingly, to show the ownership change, and we close.
The life insurance thing is, as you get older, I guess the premiums get skyrocket.
True, on hold, but a big difference that we do, one, we only require it for the buyer, and two, it's a term policy, not a whole policy that matches the term of the loan, so it'll be a shorter term, 5-year, 7-year policy. Where you get really expensive, generally speaking, is if it's whole where it's getting cash value, or if it's,
I'm not really
for
talking
15
about the
or 20
price though. I'm talking about the guy's not going to die if he's 50, 55, whatever. He's not going to die. He quits making his payments. The insurance. I guess I'm not really.
Talk about the
following
young person buying that.
Well, I know, but okay, so he buys it cheap. Well, he's not going to die either. So how do you get how does that help you that much?
In a professional services, that person, the professional skill set he has, is really who pays his back. If he passes away, we want to make sure we get paid back.
I guess I'm just thinking he'd be a lot more likely to not be able to make his payments than he would be to pass away.
You send Guido around.
And we deal with that,
There's a check.
and we deal with that
We call
from a
Guido
guarantor
every
perspective.
day.
Right. We deal with that from a guarantor perspective. Hey, why can't you pay? Well,
True.
whatever,
Right,
right?
he signs a personal guarantee, so you got. either
He
way.
does, right, so
Yeah.
he's on the hook, one way or the other.
Could you just put some numbers on it? Like, what's a typical, like if one guy was buying one guy's practice, is that 300, 500, 100, 1 million? I mean, I'm sure it depends on how much the business is worth, but look, what does that just look like? I don't know anything about this, so I don't really.
Yeah, what's the?
Yeah, so generally speaking, like I would do, we're looking at how much cash flow historically that firm generates. So if you take, I believe you're in maritime law. So let's just say your cash flow available for debt service is basically your net income plus interest, depreciation, which you won't have any from professional services. So it's really your bottom line, and maybe what you take home, right? So let's just say that's $300,000, right? That you're taking home every year. And so let's say there's a multiple of 3 times, right? Or 2 times. So hey, I want to sell my practice for $600,000, right? Got it? So that's great. Your associate or that new attorney who comes in from New York, it's like, I'll take your existing practice. Come Jessica, they'll do the numbers, say, hey, you know what? We're okay with the purchase price, but I can only finance $400,000 because the numbers tell us that's all you can cash flow. All right? From the seller's historical performance. All right, so that means you'll hold a note. So at closing on December 1st, you'll get $400,000 from First Citizens Bank, and you'll get $200,000 at some point later in the future when you can actually afford it.
From the associate.
From the
For the
associate.
associate,
That's
and
right.
that's an important point, is that the loan is in the associate's name.
Okay.
So that's how they structure it. And so sometimes it's a multiple of EBITDA, sometimes it's a percentage of net revenue. Each industry is very different with that. I'm doing an optometrist deal right now, and it's 75% is where they've landed on a sales price of their income, of their revenue from last last year, or like the average over the last 2 years. So, yeah.
And like, so for some of you single practitioners in the room, like what you might be considering is like, well, maybe I should take an associate. So maybe get an associate, they start helping with the work, and maybe 2 years later, a year later, they're like, hey, do you want to buy in? Do you want to start building on the process to take over at some point?
Right.
So that's great. How about you buy in 25%? So let's say that 25% is worth 50 grand. You can come to Jessica. Jessica will make the loan to the associate, guaranteed by the practice, and sometimes and the majority owner. You still have to guarantee it, but it is a liquidity event. All right. He now owns 25% of the firm. You just got 50 grand. All right. That helps for retirement and doing whatever you need to do. But when you start your transition, and that's more common in multi-partner firms. That happens all, like, you know, we have firms that have 20 partners and we're buying in, buying out every year.
And it's a little bit easier. It doesn't have to be somebody in the practice now, but it does make it a little bit easier. I've got an orthodontist deal that I'm working on where he started last year. And so he's buying 100% of it, but now that he's been there, he's got a little bit of history, so I can do 100% financing for him very, very simply because he's familiar with the company and he knows how it works day to day.
What we might say no is that the trust lawyer wants to buy the maritime law, and I'm like, how's that going to work? Right? So, good questions though. What else?
Most of mine are equity transactions, not asset based. Do you have a preference for how you do these? Medical practice.
In medical, yeah, in medical practice, you just kind of.
Well, the regulatory is difficult. You just buy assets. You've got to buy the entity because you've got to get
We're fine.
relicensed.
We're fine with it with the purchase of the entity. You just have to have the the proper eye doctor group is the purchase of the entity and the EIN. Yeah. So that's fine. It just needs to be properly disclosed. And I think the hardest thing I'm running into, and I might actually reach out to you after this, is that when do you flip it over, and then how do the accounts look? How do you figure the last in, last out
Right.
when that transition happens?
I just had that over a course of a year. The installment plan for the people involved, and they made the last payment, so the buyer believes that they bought the practice when they made the last payment. The seller believes they sold the equity the first day. And I got there after they
Yeah, that purchase sale agreement is important to the bank. Like, what are we buying?
Yeah.
What's itemized in that? What values?
It would just be the shares in the entity.
Right.
Then you've got to go through and figure out what it owns and what.
What does that really mean when you? Yeah.
But I agree. I mean, they've had to go through and update all the equipment and so forth. So there's a huge capital investment even after the buy-in.
Right.
You can't just buy it and then it's ready to go.
It's kind of getting it back up to par to where
It is like buying a used car and restoring it. Now you got to have money to get it back on the road.
Sometimes that costs more than the car itself.
It can, indeed. Yeah.
No, but I mean, I think that's a really good point. So, but I actually will reach out to you after this if you don't mind.
If you think, again, if you think of professional services, CPAs, engineers, architects are all kind of going through these. At some point in their maturity, hopefully they're going to start thinking about these things. How to start getting out, if you will. You just get out at 60 and sell the whole thing, or you can do it in steps. And again, like for engineering firms and some of those, like CPA firms, like they have to let them buy in. If not, they're gone. All right, they want to be partner, or they're out at some point. So that's a strategy.
Do you do the entity financing as well, the line of credit for the business as well as the buy-in for the partners? Or do you find that to be a conflict? No conflict?
Not at all. Larger professional services, law firms, especially law firms. Big law firms usually will have a line of credit that basically it's only being used for distribution purposes. So you got 10 partners. Instead of waiting for that AR to catch up and get in the bank, you'll take your distribution. The firm will take a draw on the line of credit in November, let's say, and then they'll pay it back in March, April once all the receivables come in, but everybody gets paid. That's very common in law firms, engineering, architecture, professional service. Very, very common.
I think most of us in small firms are on a cash basis.
Right.
So we don't have that luxury. But for medical practices that I work with, typically you have 10 or 20 partners, and they do have business financing in place, equipment lines, operating lines, and so forth.
Yep.
So I do new partner has to, when they buy in, they sign on to all of those instruments as a new partner. So,
Right, they need to just amend and update all those documents.
Right.
accordingly,
Yeah,
so.
it's a lot of work for us actually. When we get those new partners, gonna be, oh, you gotta now be on the node, on this node, and that node.
I hope y'all get paid something from that.
That's what origination fees are
There you
used
go.
for, but those are those people.
It's okay, we'd rather be writing the paperwork than have a problem on the back end.
I
and
agree
have to
with you.
chase it
I
down,
agree
but
with
it is a lot. It is a lot, but we don't mind.
It is. And I will tell you this, just as a sidebar, because I think a lot of people are missing out. I guess it's not your world, right? Like you know what's going on in the sunshine laws, the state laws going back down. Like banking's changed, guys, because like consider from 2010 till 12 months ago, banks, the only way banks can make money, I'll say the only way, right? Lending, cheap, 3%, 4%. The only way to make money was to lend, deploy capital at 3, 4, 4.5, 4.75. Now, come to here today, your lenders, the financial industry is kind of in a weird spot, but like, I don't necessarily want to deploy capital right now. Because I can take your deposits and invest them in a T-bill at 6% with no credit risk. All right? So, the lending institution and the consumer are feeling the effects, are maybe starting to feel the effects that only the best of the best clients or clients with full relationships have an open spigot at the bank right now.
But when you got to lend it, what, 10% to make it make sense with the risk versus the 6% T-bill, right? I mean,
Yeah, and you have to do good business. You need to do good business.
Or look, so it's more beneficial for us to lend to a lower risk and be able to charge a midpoint interest rate than it would be to do the high risk at 10%.
gotcha.
So, but I mean, and to Lou's point, that is very, very important that the full relationship now is more important than ever. You are so much more likely to get loans with a bank that is lending, because not all banks are lending right now. A lot of them have kind of already shut off. But if you are with a bank that is lending, to have a relationship with them first. It makes a very big difference. It also allows us to get better pricing in some cases because we can play off the deposits and the spread we're getting on that side to be able to lend to you on this side. So it's all really a balancing game. So
It's very interesting, the dynamic of what's happening right now, and I expect it to happen over at least 12 more months. Even to where I sat with a client yesterday. I sat with 2 clients yesterday, which I thought were kind of interesting comments. One's a marketing firm, and he's like, "I'm a great predictor of a recession. Everybody's cutting back their marketing expenses." Okay, that makes sense. That makes sense.
I missed that. Say it again.
He's a marketing firm, PR firm, and he said, "I'm a great barometer of what's coming next, the recession, and I believe it's coming because everybody's cutting their marketing budgets. I'm going to have a bad year. I'm going to have a bad, not as good as year next year." And then sat with a real estate investor yesterday, and this really I was like, "Wait, what? What did you say?" And bank is giving him a discount to pay off. They're preserving capital.
not right. No. But yeah, I have not heard that happening since 2010.
That's right.
That was really, when he told me that today, that was really eye
In
opening.
the 1980s,
Yeah. Definitely happened a lot in the Great
before you
Recession.
were born, right? So,
Oh no, wish. The SNL's days, but yeah. So it's definitely changing.
I live in a neighborhood where houses sell before they go on the market,
Nice.
and there's 3 houses for rent in the neighborhood that haven't rented for 6 months now, and that's never happened in the 10 years I've been in this neighborhood.
Really?
And there's 3 houses that normally, because of the school district and everything, and if they're small, they're generally affordable houses and for a great school district, and they're always snapped up immediately, and they've been vacant for 9 months, and things aren't selling quite as big. So I'm like going, oh, it's coming.
I think we could all feel it.
It's not affordable at 8%.
I don't know if it's high interest rates or inflation or what it is, but I just when houses in that neighborhood aren't selling and aren't renting, it's like something's about to happen. Somebody's, I don't know if it's the landlords haven't capitulated on prices yet. That maybe they went up too much on the prices and they just haven't capitulated, but something's not normal.
Well, I sold my house 4 or 5 months ago, and there was definitely this emotional thing of like, well, it was worth this. And actually, even my realtor, I was kind of mad at my realtor. She's like, no, we need to listen to this. And I was like, that doesn't make sense. Like, oh, we're selling this. And 5 months later, I'm still sitting in my house, and I've already bought a house. So there is an emotional, like, no, it's worth this. No, it's not anymore.
There was a dip already, a
Right.
small one.
That's right. That's right. So.
What do you think the rates will be in two? If the rate, is the rate for a house now about 7.5%, 8%, something like that?
Yeah,
What do you think it'll be in 2 years?
Who knows? But I would say if it's less than that, something definitely went wrong in the economy. Because they're only going to lower rates when they need to stimulate the economy, is my sense. So I'm actually okay. Like, I'd be fine if these rates were 6-7% for a long time. 'Cause that means that the economy's strong and resilient.
Well, there's about to be this huge intergenerational transfer of wealth too. That I mean, what's sitting there for the baby boomers is unreal.
It really is. It's going to be, and I think with all the changes that are coming too, it's going to have everybody looking again at where they're investing and how they're investing, and that generational skipping trust, am I saying that right? And all that kind of stuff is going to really be in the forefront again.
Well, and I think, I'm 45 years old, and, what's been beat into me is invest, save money, retire at 60. I'll be honest with you, if I retire at 60, I won't have any money when I'm 80 or 90, because I'm going to live maybe way older, right? And so we're
My dad's
also
ninety-
seeing,
my dad's
here, the
99.
right, so we're also seeing all these people who have retired coming back into the workforce because they need to, and because employment's so low, people need jobs, right? So I think the world's changing, ice caps are melting. Who knows what's happening? But
Tides are rising.
yeah. So it's a dynamic world out there, and but we all have been bankers alike. It's been the greatest economy for 10 to 12 years. Low interest rates that spurred a lot of businesses, right? A lot of people are living in a lot of big houses because the low rates allow them to buy houses and create private equity firms and invest in companies. Now, if I'm sitting with a bunch of money, do I really want to invest in a company that I might lose everything when I can go get a 6% bond from the federal government? So those are all affecting decision making, right? Why I invested in companies because I could only get a 1% return in a CD back then, but now I can, right? So that whole follow the money, follow the return is real. So it'll be interesting. But that being said, we're in North Florida. We're in Florida and in North Florida. We have the cheapest land available, low unemployment. Everybody's coming here no matter if you like it or not. They're coming from the north, from the west, from South Florida. They're all coming because it's a better quality of life. It's just cheaper. It's flat out cheaper in North Florida. So I think if there is a recession, we'll be the last ones to feel it. I don't believe personally that we're in North Florida, we won't feel it. No, we'll just be the last one, but we'll also be the first one out. So that's kind of my thoughts.
What a prognosis. Great.
Yeah.
Fascinating. This has been a fascinating concept and discussion because it really affects all of us in some way or another. And so I think, Jessica, I've got you on speed dial. And so